This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
TradeFlow Capital Management is pleased to be one of the founding members of the Trade Finance Working Group launched on the 27th of January 2023. Created under the auspices of the Alternative Credit Council and AIMA, the Alternative Investment Management Association, the working group brings together alternative lenders in the trade finance sector to support the development of trade finance as an asset class, with the remit to raise awareness of trade finance amongst investors and address challenges to greater participation by alternative lenders in the sector. Joining this group aligns perfectly with TradeFlow's experience in this asset class and its mission to help reduce the growing trade finance gap faced by SMEs.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil prices rose for a second straight session on Tuesday, driven by optimism about recovering demand in China and concerns over supply shortages following the shutdown of a major export terminal after an earthquake in Turkey. Brent crude futures were up $1.78, or 2.2%, to $82.77 per barrel at 10:42 GMT, while West Texas Intermediate U.S. crude futures rose $1.74, or 2.4%, to $75.88 per barrel. The price of the barrel is finding support as the reopening of the Chinese economy, following the end of the zero-COVID policy, is expected to drive a significant increase in demand for crude this year, said active trades analyst Ricardo Evangelista.
The price of coking coal has surged to a 7-month high, but the question is whether the rally in the fuel used to make steel is down to an improving economic outlook, or whether supply issues in top exporter Australia are to blame. The price of Singapore traded contracts linked to the spot price of Australian coking coal ended at $345.67 a ton on Monday, just below the $348 reached on February 3, which was the most since July 1 last year. The price has jumped 70.3% since the 2022 low of $203 a ton, reached on August 1 amid concern that the global economy was heading into a recession in the wake of the surge in energy costs sparked by Russia's invasion of Ukraine on February 24.
Moving on to the top news in the energy sector.
Saudi Arabia, the world's top oil exporter, raised prices for its flagship crude for Asian buyers for the first time in 6 months amid an expectation of oil demand recovery, especially from China. The official selling price, OSP, for March loading Arab Light to Asia was raised by 20 cents a barrel from February to $2 a barrel over Oman, Dubai quotes. Aramco said late on Monday, beating a market forecast of a 30-cent cut. The OSP is quite unexpected. I think it indicates that Saudi is bullish on oil demand, said a Singapore-based oil trader.
A national strike against planned pension reforms reduced France's power supply and disrupted petrol deliveries from French refineries on Tuesday. Strikes have been taking place since mid-January as unions protest against the government's plans to make people work longer before retirement. Public transport and schools have also been affected. Total power supply was reduced by about 4%, or 2.9 gigawatts, GW, due to decreased supply at 2 nuclear reactors and several thermal plants, data from power utility EDF showed.
Next, we have the top news in metal markets.
The United States is considering raising the import tariff on Russian-made aluminum to 200%, as it seeks to ramp up pressure on Moscow over its war in Ukraine, but a decision has not been made yet, a U.S. official said on Monday. It's something we are considering, the official said, adding an announcement about any tariff increase was not expected this week. The official's comments came after Bloomberg news that an announcement of a 200% tariff on Russian-produced aluminum could be made as early as this week.
Prices of London Metal Exchange, LME, zinc for delivery tomorrow traded at a large premium on Monday over prices for the following day due to buying fueled by nervousness about availability in the LME system as stocks hit historic lows. The phenomenon in which metal is priced more richly in the near term than further out, known as backwardation, is often seen as a sign of underlying tightness in the market. The premium for buying zinc tomorrow and selling it the day after, a trade known as Tom Next, rose to $10 a ton compared with a session low at $1.50 a ton. Last Thursday it rose to $12 a ton, the highest since October 19. We will now look at the top news in the agricultural. Indonesia will review its palm oil export quota ratios amid rising prices of domestic cooking oil, the coordinating Ministry of Maritime and Investment Affairs. Indonesia imposes a so-called domestic market obligation, DMO, on palm oil whereby companies are allowed to export only after they have sold a portion of their production at home. The government regulates the price of palm oil sold under the DMO scheme, which is channeled to a cheap cooking oil program.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.